had really low volume today and yesterday. Everyone just watching out for that big event risk tomorrow at 10 a.m. with Powell's speech. But we are much better set up going into it than we were just 8 days ago. We have real yields up 40 basis points, the 2-year near the mid-June highs, and we have stocks off 4%. So much better position. I think we're likely to see a relief tomorrow unless we get a big shock from what Powell says. But one thing I would keep an eye out on if we look to next week and into the fall is that the MOVE index, or implied bond volatility, is still very, very high for where it normally is in late August, suggesting that actually we're likely to continue seeing a lot of action in the yield curve, which could affect stock markets in the fall. Because it all depends really on where inflation goes and what the Fed is ultimately going to do. You mentioned Powell tomorrow. A lot of Fed speakers today. Our Steve Leisman, who's going to join us in a little bit, interviewing many Fed heads today, if you want to call them that. Here's what Bullard said about inflation expectations, because I want your reaction to it on the other side. Here's Bullard.
A baseline would be that probably inflation will be more persistent than what many on Wall Street expect, and that's going to be higher for longer, and I think that's a risk that's underpriced in markets today.
Yeah, how about that notion, that is a risk and it's not priced in or very much underpriced in the market? Do you feel that too? I very much agree with that sentiment. I don't think that we can have the confidence right now to be investing based on knowing exactly what the shape of inflation is going to look like ahead and what the shape of interest rates is going to look. I think there's still a big risk that we stay higher for longer, which is different than what the market is pricing in both inflation and rates. Exactly. In both of them. And that really we're at a turning point of a new regime where we have a slightly higher inflationary backdrop and a higher interest rate backdrop. That's better for fixed income investors if you think out the next 3 years, 5 years, 10 years. But it's a tricky spot for stock investors if you think about the 14% multiple expansion we've seen since mid-June. It suggests stocks are still a bit expensive here. You sent us a wish list of sorts for Jackson Hole, things you'd like to have answered coming out of that. One of the things you said was an estimate of long-run inflation. Sounds fleeting, especially given what Bullard just said. They don't know. I don't think any of us know, and I think we should all have tons of humility about inflation after so many upside surprises this year. But I do think that it's not just cyclical forces pushing up inflation. There have been some changes in structural forces, too. We've seen perhaps a peak in globalization. We've seen more power shift towards labor. We've also seen these big energy shocks. So there is an argument to be made of slightly higher inflation over the next decade than the previous decade, and hence higher rates for longer. You also have on your list a clearer view of what neutral is, and this is center to the debate, right? What the Fed chair said at the presser last time was we're basically there. Others would suggest no way and not even close. Now we have this whole debate on what neutral actually is. It would be great to have more of a discussion around what Fed members are thinking about in terms of the neutral rate, because I do think it would signal that there is very little visibility about it, that maybe we're not quite there yet, and hence that we will need higher interest rate this cycle just to be at neutral, never mind to actually be restrictive. But we'll have to see what discussion we get tomorrow. There's so much on the wish list. I think Powell's likely to just stick to the script and stick on mentioning that the focus is on fighting inflation for now, and it'll depend on the data. God, sometimes sticking to the script has left the market confused. We'll have to see what comes of that. 75 basis points. Is that in the market for September or not? So at the moment, 60% probability of 75 basis points is priced in. So it's more priced in than it was just 8 days ago. So much better setup going into the speech tomorrow. But I think the issue is we just have no idea what inflation indicators they're looking at to make that decision of 50, 75, never mind what happens in November, December, 2023 and beyond. So my wish list also includes some clearer signals. Is it headline? Is it core inflation? Is it lagging indicators or leading? Is it just gasoline? Or what about natural gas prices surging? So there's a lot of uncertainty about the path of inflation and the reaction function to it.